This episode of the podcast is brought to you by New Bloom Labs.
Would you consider your relationship with your third-party testing lab complicated? Do you find yourself waiting long days or even weeks to receive your certificates of analysis? Or are you receiving inconsistent reports? Or reports that are just hard to understand in general? If you said yes to any of these, that's when you need to stop and call New Bloom Labs. New Bloom Labs understands the cannabis industry and what's important to growers, processors, and manufacturers. They offer the fastest turnaround time in the industry while providing precise, accurate analysis for your cannabis products. Most cannabis producers are frustrated with their third-party labs, but you don't have to be. Call New Bloom Labs at 844-TEST-CBD or visit their website at newbloomlabs.com. Superior science, rapid results, New Bloom Labs. Hello, my fellow people of the plant. Thanks for tuning in to another episode of the Cannabinoid Connect podcast, your favorite podcast that includes industry-facing conversations with the industry's leading experts that aim to educate and inform the public regarding the plant's endless benefits. My guest today is Rick Batenburg III. He's the Chief Investment Officer at Cliintel Capital Management Group. Rick Batenburg III, thanks for joining me today, man. I appreciate it.
Hey, thank you so much for having me. Very honored to be here.
Yeah, absolutely. It's perfect timing too, because man, I mean, when I look at the financial markets, specifically the cannabis markets, things are booming right now, with the momentum that we're seeing from the Senate, with, the Senate Majority Leader Chuck Schumer talking about decriminalization and potential legal federalization across the board. So Rick, let's talk today about the financial side, your firm's portfolio, clientele, and kind of what you're looking for from an investment standpoint, and just other future outlooks. And we'll dive into all that. But before we do, let's kick it off with you. So, from my understanding, you got into this space. You initially were a Merrill Lynch private wealth guy, who decided to transition to cannabis with your dad, right? Father-son duo. Is that right?
That's right. Yeah. So, I was working in the private wealth, and then I was doing the syndicate for the IPOs and secondaries. And by doing so, what we were able to do is really understand what it's like on the buy side, especially these companies that we're taking public or that we're having liquidity events for. And so in 2015, I went over to my father and asked him if he'd be willing to manage a venture fund in the space. And I'll never forget, he was on the phone and shrugged at me. He goes, "Well, if you can raise the money." Went back to this conversation. But
did he have any idea that it was in cannabis? Or
oh yeah. He had made some private investments previous to this, kind of round out our portfolio. So we've worked in the kind of family office venture space for my whole life. So my father and I have been working together for a very, very long time, ever since I could read a P&L at 10 years old. So this wasn't too far outside of scope. But we happen to be in Colorado. We happen to have kind of a unique background in the way that he had a very strong entrepreneurial kind of making payroll type background, doing a lot of angel investing and operational consumer product goods, everything to entertainment. He was the CEO of a publicly traded firm in the early 90s that owned radio stations and comedy works and different bars and restaurants. And then everything from making infomercials to doing consulting for big cable. So Time Warner, Comcast, wow. Bright House were his clients until about 2015. And then, my background, obviously being in the capital raise space, the money management side, we sort of had a perfect storm, happened to be in Colorado. And, I took a big bet that the Marijuana Enforcement Division would allow me to have a fund manager at the head of a blind pool that would allow me to invest into cannabis without having to be a 2-year Colorado resident, which at the time was a requirement. So we actually became the first qualified institutional investment capital firm allowed to hold licensed entities inside of a fund, which wow. Subsequently over the last 2 years has sort of changed just because the rules have changed in Colorado specifically. But the intention of that was really, we didn't know where we wanted to be in the supply chain of cannabis. We knew that it was happening. We knew that we could see the writing on the wall, but there was really no diligence baseline as far as where you wanted to be, what a good dispensary should do, what a good ancillary company should do, what a good grow, extraction, training, compliance, whatever it might be, should do, because it was such a brand new industry. So When we went in with our initial strategy, which was to buy out distressed assets, we were coming in talking to some of these operators, Cannabis 1.0 operators. We're like, okay, show us your P&L. And they're like, what's a P&L? And we're like, oh, well, all right.
And this was probably the realization of like you're talking to legacy operators who, as the industry is becoming more legitimized and whatnot, this is kind of foreign to them, right? They're not used to operating under that.
I would say I will say this: they're quick learners. They're totally quick learners. There's some very good Cannabis 1.0 operators. So, and actually, the guy who invented the clear and distillate as a product category, frankly, in 2013, he's still involved with our company, still our chief science officer. So, I would say that we're very unique in the way that we have a meeting in the minds from Cannabis 1.0 to we're the big bad suits, right?
Absolutely, yeah. And we've echoed that. Together. Yeah, just to pause you, we've echoed that also. I don't want to make it kind of that we're just talking about one side, because each side does add value. It's just that with the illicit market, there's kind of a way in which you're used to operating, and then as these professionals from other industries are entering, there's a good synergy there, right? And learnings on both sides.
Right. Well, and it takes humility and conviction, right? So it takes the humility to know what you don't know and ask good questions, and so you're able to grow on both sides. But it also takes a level of conviction in the way that you go, hey, this is brand new. We got to pick a lane and go do this. And you don't find out whether you're right or wrong until you do something.
Right.
And so really trying to bring operational expertise and really fundamental business values into the cannabis space has been an incredibly rewarding practice. But like I said, what we were doing was really understanding where we wanted to be in the supply chain. So we bought everything. So we still own a 50,000 square foot grow, extraction, training, compliance, all the way to dispensary. And the reason for that was really because there was no baseline for our diligence process to go, okay, well, here's where we want to be and this is where we want to be. So over the past, 4 or 5 or 6 years now, we've whittled that kind of down into a more specific strategy for that portfolio companies, which is brands and distribution, right? And that really is about understanding where the value in cannabis is going to be, not tomorrow and not in a year, but really in 5 years. Like, where's the value in cannabis going to be? And the best kind of most succinct metaphor I can give you is in alcohol, right? So you don't necessarily want to own the liquor stores because people have geographic loyalty to liquor stores, but not any kind of emotional. Right. And then on the grow side, you don't necessarily want to own the wheat farms or the grain farms, but you do want to own the brand, right? You want to own Smirnoff. You want to own something that can be widely scaled, right? And that has an emotional relationship with the consumer that solves a specific problem for a specific demographic. And that's really kind of where we've settled in as far as, where in the supply chain. We still own legacy assets, the grow, but unfortunately a grow is not scalable, right? You can't really export a grow. You can't make it, you can grow it, but really it's a finite thing. Whereas a brand, we distribute into over 1,000 dispensaries across the US for one of, the clear in our portfolio. Mm-hmm. And that's about channel marketing in the way that having that emotional relationship with not only the consumer, but the industry insiders, the buyers, the owners of the dispensaries, and providing them value and providing them good supply chain and consistent, safe, quality product allows us to layer on either other portfolio companies that have, diversity of brand, that solve a different problem for a different demographic, but really expanding the breadth and depth of the product offering allows us to use those channel marketing relationship development to layer on other products and therefore grow through not only operational accretive acquisition, but also financial accretive acquisition. So that's kind of where we've settled in after, so long of really getting our hands dirty. I went in and I put our products together for 6 months, doing everybody's job in the MIP just to make sure that I really understood our business. And that's really what it takes, I think, in cannabis, because it's so new. There's a very on high perception in cannabis from a lot of the Canadian publicly traded firms who, they're run by bankers. They weren't run by people who grew cannabis before. Right. And in diversity of that or direct opposite of that is in Colorado, California, where this kind of industry was born, is very cottage-like nature and by design, right? So you could have in the medical market in Colorado when it first started, they had to sell 70% of what they grew through their own dispensary, right? So it was by definition, it was cottage, right? It was small. So we have two parts of these industries kind of coming at this from two different directions. And, it's really our goal as a venture capital firm to unite those worlds in a way that is consumer focused, not focused on, how much multiple can we get on our OTC market stock, and also not, hey, what's the highest I can absolutely get? And, I want the stinkiest weed that I can find, but really coming up and focusing on, hey, what infrastructure and developments from a business and from a cannabis perspective are the most important to the end user, right? Not what's going to be best for the stock price and what's not like, hey, what's going to work for the connoisseur, the guys that have been smoking weed for, way before it was legal, but, who is, the target demographic, and how are we designing not only just a product that helps them, but a company that fulfills on the promise of what brands are. And a brand is a promise to your consumer that they're going to deliver the same thing with consistency over and over. And I think that that's really the component in cannabis that is where there's an opportunity. And that's what's really going to have the most development here for the next, call it the next couple of years, will really be, developing those brands and those emotional relationships with those consumers, and really developing trust with the consumer.
Right. No, that's such a strong strategy to implement, and I think it's spot on. To have the end user, the end consumer top of mind, right, and then everything else will follow, because that's where brand loyalty comes into play, and they're returning customers, right? That return on investment. So let's dig a little deeper and talk about, so like what do you look for? What does Cliintel look for when investing in certain companies in terms of their management, right? Specifically the leadership team. Like, what are the expectations from y'all?
Sure. So whenever we're evaluating a potential acquisition or an investment, there's kind of three, like, you must be this tall to ride for me, I look at. And the first thing is that the CEO needs to know how to do everybody's job in the company. And I mean everybody's job in the company, meaning there will be no holes if there's a potential loss of human resources, or somebody's sick, that the train doesn't stop because the CEO is going to keep going. Okay. Number two is that the owner, founders, CEO, and operators have an emotional relationship with the success or failure of the company. And so that can look and manifest in many different ways, right? Sometimes it's, they've got their life savings in, sometimes it's they've got investors that are close to them that are in the deal. But look for emotional cues that tell me that they will sooner die than fail. And then the third one is that they know their numbers really, really well. So meaning they know how they make money. They know what their margin is, their gross margin, their net. They understand that they need to be able to make money with their accessible market. Not this pie in the sky, hey, in 3 years when it's ubiquitously legal, we're going to make all this money. But it's, hey, can I create EBITDA with my accessible market? And that's important in cannabis specifically because you can't take THC over state lines, right? So if your whole strategy is based off of being able in 5 states where we're going to be profitable versus, hey, show me how you can be profitable in 1 state, and then we can export that structure into the other states. And that's sort of the first 3 things that I look for. And if they don't have one of those 3 things, usually it's red flags. Yeah. But, understand your numbers, be emotionally invested in what you're doing, and really understand your business from an operational perspective, right? Be able to do everybody's job in the company. And that doesn't necessarily mean you need to be able to do it better, but you better understand what they're doing. They understand the components that is going to be, whatever you're going to present to your customer, you better really understand what you're presenting to your customer and be knowledgeable.
Right. Yeah. And while those 3, kind of areas of criteria seem simplistic or basic, they're super important. Like, they're vital, right? And so I love the way you kind of distill it and package it in that way. That's just, hey, this is kind of what we're looking for, and if you don't meet this criteria, it's probably not going to work out. And in some cases, like you said, would the CEO would rather die than fail? I mean, while that may sound extreme, it's true, right? I mean, you really got to believe in what you're doing, the mission of the company, the what the brand stands for, and walk the walk, basically.
Well, and you know what, it's this is like there are old cliches about running businesses for a reason, and the way that nobody really believes it until they've been through it, which is there are times where you're for sure going to want to quit, and that it will look like you're done, and for the first 1.5 to 3 years, if it doesn't, you're probably not doing something right. So it takes more than just a hope and a wish. It takes some grit. You got to be able to fight through when it becomes irrational. And those are the people that make it. And I've seen it enough times to know that when somebody understands that intrinsically because they've been through it, their success rate is much, much higher. But I've never met a successful pessimist. So, an internal optimism is never a bad thing.
That's right. That's absolutely right. So, and actually that's a great segue. So when you talk about the grit and like enduring the challenges that these operators face on a day-to-day basis, right? Let's talk about the macroeconomic challenges that are presented in the current regulatory framework that is set in the
Sure.
US.
Sure. So in contrast to that, and maybe the easiest way to kind of draw the comparison here, just to give it some reference, is United States versus Canada, right? So Canada got ubiquitous legalization across all provinces at once, right? One time, which there's a few fundamental differences against the U.S., right? So the U.S. has cottage legalization state to state. Okay, so you cannot move THC products over state lines, and every regulatory environment in the United States is different, right? So producing a consistent, clean, reliable product becomes extraordinarily difficult, especially when you're creating an organic substance, right? So just because you have great flower in Illinois, maybe the grow you've got in New York is not able to produce the same product quality.
Right.
And here's the other component to this, is just the cannabis plant in general. Even genetically identical plants grown in even very small, very different conditions, and that can mean if grown on the other side of the same grow room, can have different cannabinoid, fats, lipids, waxes, and terpene concentrations relative weight to volume, which means that creating brand consistency or product consistency is new infrastructure with every state that you open in the United States, right? So what that means is that things become very capital intensive because you can't scale like you would normally scale a traditional business where you're going to new states, right? So I would build a big factory in a centrally located place and then ship, right?
Right.
You build one product, one facility, and then you're able to ship. Now, Canada is able to do this right now. And part of it is because, they sell everything through the provincial governments, just like they do liquor. Actually, I lived in Canada for 3.5 years playing junior hockey before I went to college. And so I'm very familiar with kind of the bureaucracy of Canada. And it's a much different system. It's much more not say well controlled, but much more controlled with their substance distribution. And they're using the same system really to distribute cannabis, which means you're actually selling it to the province, who is then reselling it to these state approved stores. In the United States, it's super heavily regulated, but we're not actually going through the states, right? The state's not facilitating the transactions. But from a macroeconomic perspective, there's a huge disadvantage to United States operators simply because of that rule, right? So you can't go to scale as fast. Right. The second big disadvantage is that there's no banking. And when I say banking, I don't mean checking accounts, okay? I mean US investment banking, okay? So that was sort of my world over at Merrill on the buy side, which is, just quick lessons for the listeners if you don't know.
Sure.
So a company that wants to raise money in a legal space, will come to a Merrill Lynch or an investment bank, right? So any of the big investment banks, CIBC, it doesn't matter, right? And that the investment bank will go, okay, how much money would you like to raise? And then, I want to raise $10 million, and say, okay, here's what we're going to do. You're going to sell me your shares for less than they are on the market for. And we're going to turn around to our customers, right, our people that we manage their money, and we're going to sell those shares below market to those customers because I know they'll buy them, right? So you go, hey, I'm going to sell, let's say it's $10 a share. We're going to sell 10,000 shares, right? We're going to raise $1 million. Here you go. And they are able to raise a bunch of money that will go to the operational expansion of whatever that company is that came to raise money with them. Now, that doesn't happen in the United States right now. Now, the United States investment banks, absent maybe China and a few in Great Britain, are the most powerful investment banks in the world that have the biggest bankrolls because they manage the most money, trillions of dollars. Now, that is not going on yet. And when I say banking, that's going to be a big thing. So when Georgia flipped, it is very likely that we're going to see a banking act go through, which is going to do two things. One is, if the Safe Banking Act goes through, U.S. investment banks will be able to touch U.S. licensed companies, okay?
Mhm.
This is not going to allow for interstate trade commerce because that's going to be a whole other thing. It's going to be like customs for cannabis.
Right.
That's a long ways off. However, being able to bank, meaning U.S. investment banks can then invest into cannabis, meaning the U.S. investment, community, right?
Right.
NYSE, NASDAQ, OTC markets, doesn't matter, is going to be able to touch U.S. licensed companies, which has not happened yet. Okay, the only thing that's going on right now is that Canadian publicly traded firms can control U.S. licensed entities. Okay, and this is even more hilarious. U.S. publicly traded firms can control Canadian, right, licensed entities. Okay,
Right.
silly. However, that is going to be a big change. That's going to be a big shift. So when that happens,
Rick, quick question on that. So
sure.
this is different than like the opportunity for these MSOs, these multi-state operators in the U.S. to be
Sure.
listed on the NASDAQ or the NYSE, right? Like
Yep.
that's a separate discussion. So you're talking about investment banks actually playing ball and investing into these companies, once they're listed or even after they're listed, right?
Yes, but what you actually described is the same thing.
Okay.
Because you need an investment bank to be listed.
Right.
Does that make sense? So
Yes.
an investment bank represents you to the markets. Okay. And so whenever you go public, unless you're doing a direct listing, which is a little trickier, you still would need a sponsor. But an investment bank, and the reason investment banks exist, and they don't necessarily have to have clients like a big Merrill Lynch or anything, but what they are is they're licensed to sell stock. Okay. Which means that they've got 766, all these different licenses. It's kind of the same stuff I held when I was at Merrill.
Mm-hmm.
And that's the reason you need a U.S. investment bank, because they're regulated, okay, by the SEC,
Right.
And FINRA. So because of that, you need large investment banks, U.S. investment banks, to go public in the U.S.
Right.
Okay, so what you described, you're correct, but it's really the same thing. It's exactly the same thing. But
Okay.
what it really means is that there's going to be bigger money coming into cannabis, U.S. cannabis. So expect rapid, investment into United States cannabis, and I would anticipate, and I may be foreshadowing some things here, but you would anticipate some IPOs and listings from U.S. operators that have not been bought by MSOs or Canadian entities. You're going to see some real organic IPOs here in the next 6 to 12 months. It's going to be exciting. Yeah.
Wow. So this is another great segue. So let's talk about, because I know that, and correct me if I'm wrong, but Cliintel, are y'all focused primarily in the private funding space?
Absolutely.
Okay.
Mm-hmm.
So let's talk about the differences between private funding versus public investments. Pros and cons, I guess, for both.
Sure. So like anything, a public investment, whether you're in cannabis or not, has upsides and downsides. And obviously the biggest upside you have with a public investment is liquidity. Okay. So your ability to exit the investment. Okay. Which allows you to be a lot more flexible with how much you're allocating, when you're allocating, what price you're in at. However, the upside's not as big because, you've got the company is obviously fairly well developed. You're going to be some of the last money in. And you have to arbitrage to really make money unless, in a growth industry, we're not talking blue chip, not a lot of cannabis companies doing dividend distributions, you know what I mean?
Right.
So if you're really looking to make money in the cannabis space and you have a small amount of capital, going into the public markets, not a bad idea. My advice always is buy and hold, right? Buy a big basket of stocks of companies that you believe in and, forget about it, right? Buy and hold, right? So the cannabis game was not going to be done being played, at least growing at this rapid rate for probably the next 10 years, right? So that's the timeline you need to be thinking on if you're going to invest in the public space, right? From the private perspective, that's obviously a lot more hands-on, but there's not as many measures to kind of stop you from losing your money or doing something stupid, because there's no qualifying entity that's saying, yes, the financials are correct. And yes, they're doing what they say they're going to do and reading your S1 and you're doing public filings. So you have to be able to do your own diligence. You have to be able to really understand what it is that you're investing in. And frankly, like depending on how big of investment you have in these private companies, you may need to get your hands dirty and go operate. And that's,
Right.
In no uncertain terms, kind of what happened to us is we entered the space with the expectation of doing kind of private equity type investments, which is more passive. And we ended up doing more like VC work, which is more, acquiring and taking operational control, installing our own management. And it really wasn't because that was our intention as much as it was the requirement, because we're like, oh no, you guys need way more help than we had anticipated. So
Right.
the reason for that though is the upside's always much bigger, right?
Right.
And that's simple, right? That's math, right?
Right.
So it really depends on what type of investor you are, and really what you want to do. But I would say if taking a passive investment, use a fund, use a professional manager. You don't want to be, one guy in one deal, one of 30 guys in direct investment into one cannabis private deal. You really want someone like us, or and there's some other good funds out there that are doing really good diligence and are very uniquely qualified to understand what they're investing in and kind of what the strategy is, and that can watch it every day. Which is what our venture fund does. Is we're very we sit in the boards of these companies, and we're very intimately involved, both as investors and giving operational guidance or extra additional resources, or just strategic partnerships. So it's simple, right? Risk is higher, reward is higher.
Right.
Liquidity is higher, your risk is lower, your upside's lower. But again, taking companies from private to public, that's really where you get the big jump. And that's kind of our speciality, if you will, is getting to liquidity. Is kind of how you exit these assets, because it's not about necessarily, I don't want to sell them privately, right? Because I'd like to start participating in their growth after an IPO.
Right.
Because remember, IPO is not the end. The reason you do an IPO is to raise money so that you can continue the business strategy and grow further. Right. So there's kind of a misconception in a lot of people's minds, just because of the nature of the retail trading market right now, that an IPO is like, okay, we're done. And that couldn't be further from the truth. The IPO is the start, right? That's like, okay, that's when things get real, because your access to capital is increased, tenfold, and your ability to raise that money at a cost of capital that is not going to make you gag, especially in cannabis, which cost of capital in cannabis is between 14 and 20%.
Right.
Whereas you get to the public markets and that drops, down to almost, a reasonable price. So, like talking biotech cost of capital. So, there's a few reasons to get to the public market, but mostly your capital stack becomes much wider. And the simple reasoning for that is that, well, there's a lot more people that can invest in you, period. Right. So the multiples go up, your multiples on your EBITDA, the multiples on your net, the multiples on your growth revenue, and your trailing or your forward 12 months become a lot more appealing, just because investors know they have liquidity, which means they're not as afraid about tying capital up. So you're able to raise more money.
Sure. No, that makes sense. And point taken, right? I mean, when you hit the IPO, like that's where it's game on, I mean,
Right.
the accountability level raises, the number of stakeholders that you have and you're accountable for raises. I mean, it's a major leagues basically. So yeah,
Totally.
no, totally makes sense. So what trends have you seen on the investment side? And let's kind of parse this out in three different stages, right? Let's talk about pre-COVID, right? And then during the pandemic, and now what we're seeing post-COVID in terms of behaviors, volatility, everything.
Sure. Well, so this market, cannabis in general, changes so fast all the time because of the changing regulatory environment, that some of that will be COVID and some of that is just the cannabis space in general. We're definitely seeing a movement towards concentrates and towards finished goods, especially edibles is the fastest growing category. And the reason for that is that people are home more, right? So they're more, we saw a bump in consumption, and same of alcohol as well, right? We saw a bump in consumption. And that's partially just because people were locked up, they weren't out, and cannabis is traditionally not as a social drug. It's more of a home drug, or it's not out at the bars and things like that. So we saw an increase in consumption, both in per capita use, but also in pro rata use, meaning more people are using cannabis. Stuck home with maybe their millennial kids, which is, I think it's the highest rate it's ever been, with people, with millennials living with their parents,
right?
That are exposing both of their baby boomer parents to the cannabis plant as well. And so the trend being, we're seeing more people use it, and we're seeing more people that are already using it use more of it, which is obviously positive for the cannabis space in general. And I would argue for, our overall composition as a, humanity in the way that it's not quite as damaging as alcohol to the system. There's a whole
Absolutely.
reason, obviously, but we're seeing, reduction in overdoses of opiate overdoses in states where it's legal, seeing reduction in like veteran suicides in places where it's legal. And these have been on a very continuous trend, with or without COVID. Now, so here's some of the negative trends, if you will, that affected cannabis, which are, we still have to produce this stuff. So, when COVID was super at its height, we had to be very, very careful. And not that we're still careful, but, when it was new, it was very scary, right? We had to have our employees in there, and we had to be very careful about being able to keep supply chains, and keep product on the shelf. And there was a lot of companies that maybe didn't take it quite as seriously, or maybe they just made a mistake. What Picard say? It's possible to make no mistakes and still lose, right?
Right.
That's life. So that presented some unique challenges as far as being able to keep supply chain on the shelf. And luckily, because we have some really talented human beings, the president of Clear is a Berkshire Hathaway trained sales ops guy. The CEO is a veteran CEO. Led a $140 million exit to Jones Knowledge in 2006 from a venture-backed company. And we've known he's been a family friend for 20 years. Tom Brookshire's amazing human being. And then we have Alan Fine, who's been a publicly traded CFO for the last 10 years, 12 years. So we have a lot of really good people that they didn't necessarily come from cannabis, but they knew what it took to make sure that we kept supply chain. It's a consumer packaged good at the end of the day. And so we were able to take market share back from some of our closest competitors, especially in Colorado, who were unable to really keep product on the shelf because of the challenges that this new paradigm presented. So that was a big part of it, was just operational expertise in the way that, and had nothing really to do with cannabis, is more to do with just knowing how to stay safe and operational expertise around processing these systems. And I wouldn't say we're post-COVID yet, so I'm not going to comment on necessarily that this is all said and done.
Sure.
Because a lot of the restrictions and a lot of the challenges still exist in the cannabis space. However, I think that the output of this is we've seen more people use the plant, and more people per capita using the plant, both in edible form, concentrate form, and flower form. Obviously, there will always be the flower faithful. And in fact, one of our portfolio companies just launched a flower product in Oklahoma 2 days ago, which is a pre-rolled twax joint, which has distillate infused into the joint itself.
Wow.
And the reason that and it's so strong. I mean, it's so strong. But the reason that product exists is because we're seeing tolerances increase, right? So and that's important from a consumption perspective, because this is not like a buy one and then you're good for 5 years, like a phone or something. This is a consumed product, so people are using the product and they're eating it. And I guess
in different formulations too, right? I mean,
yeah.
they're eating it, they're smoking it, they're tinctures.
Right.
Yeah.
Yep. And it's wide, and everyone has their own kind of preference, but I mean, it's exciting to see all these different brands, all these different strategies, if you will, to access different consumer demographics kind of explode, and like they're really adding value to different people's lives. And it's so gratifying when I've got either investors or friends that that they're like, oh, I use this every day, it's awesome.
Right.
And actually I have a rule that if I ever see anybody using our Clear products in public, I always give them a pen, and I tell them, well, because the thing is, like, there is a big restriction on marketing in this space. So with all my investors and all my friends and our employees we have a standing policy that if you ever see anybody using our pen in public, or you see them using our stuff, you give them a pen and we will replace it.
Wow.
Well, but the thing is, like,
how many are you carrying per day then on you?
Oh, I always have 10 pens on me.
Okay.
Always by default, right? And you know what? We are number 2 or 3 depending on the month in Colorado. And this kind of our home state is where I'm from, so it's always warms my heart to see people using our product, and they're excited about our product, and that really is vindicating, I suppose.
Absolutely. Yeah. No doubt about it. I want to talk to you about M&As and like
Sure.
the outlook of consolidation in 2021 and beyond. We
Sure.
talked about it earlier. We've the rapid growth that we're seeing with reform at the federal level and whatnot. So what are you expecting in terms of consolidation, and what can brands do to position themselves for success?
Sure. So we're going to see rapid consolidation, and especially if the Safe Banking Act goes through, which I believe it will. And the reason for that is because funding acquisition, there's two types of ways to do acquisitions, and then there's kind of a vanilla swirl version. So I'll give you the chocolate version is all cash, right? Hey, we're going to come and buy your company, and we're not going to give you any stock in the new company. And that is a very rare type of acquisition deal. That doesn't happen very often. And if it does, it's usually from a very large corporation that is acquiring maybe some intellectual property, not necessarily any kind of operational company. And then the vanilla version, if you will, would be like an all stock acquisition. So we've seen a bunch of these over the last 3 years, especially with the Canadian operators. Okay. So what they're doing is they're going in and they're like, hey, we're going to buy your whole company for stock. Okay. We're going to get no cash, and you're going to be a part of the bigger firm now. And now we're under this big umbrella. Okay. And then there's
is that what happened with Tilray and Afria, or okay?
Yep. It's very rare that if you see a number above 100 million, it's very rare that there's a whole lot of cash involved in that deal. So, and the reason for that is U.S. investment banks can't touch this yet. So what you'll expect to see is less vanilla, right? So less all stock deals, and you're going to start to see more kind of vanilla swirl deals where people are taking some cash off the table, some chips off the table, and taking a bunch of stock in the parent company. But really what's going on is that a lot of these Canadian companies, some good operators, some not so good operators, but there's kind of a hodgepodge. You're going to start to see more acquisition, both from them. But what'll really be interesting is there's a lot of SPACs, special purpose acquisition companies that have been funded that need qualifying deals to do, that have already got a bunch of cash, that you're going to see these SPAC deals go through, where you're going to see these, professional money managers or professional operators in the finance space, not the cannabis space, looking to go do these deals with brands that they think have revenue, EBITDA, they've got good management, they got a good brand. And they're going to be looking for that, because a lot of these larger companies, whether that be big ag, big food, big tobacco, big pharma, if they decide to enter this space, which I believe they will, we've seen that with Molson Coors, we've seen kind of people dip their toes in. They're going to buy their way into the industry. You don't build your way into the industry, which is very typical of any kind of growth segment. So they're going to be looking for brands that have strong distribution, right? And brands that have, again, an emotional relationship with the consumer, meaning that they own the consumer. The consumer knows their brand, they're familiar with it, and that they don't have to necessarily recreate or spend a bunch of marketing dollars to capture that consumer. Right. So what it comes down to is, be profitable with your accessible market, because it's not necessarily about being in as many states as possible. It's about being in as many stores as possible, right? You're better off dominating, one state than you are trying to go to 12 states and just being a fly on the wall. So, I mean, that would be one thing. I think that some companies get a little wrapped around the axle trying to be in as many places as possible, because there's some perceived value to that. Which I just, and you can have a different opinion, everyone has a different opinion, but it is my volition that, being in as many dispensaries as possible, if you have a THC product or shelf space, if you have a CBD product or whatever it might be, that's the real value in the growth. So as far as positioning yourself for it to be acquired. Right. But you're definitely going to see two main kind of themes this year, which is you're going to see real IPOs from US operators that have not been rolled up yet. Right. And then you're going to see consolidation, both from SPACs, from big ag, big food, big tobacco, and big pharma. Okay. With more kind of a medical strategy. So we saw Epiledex got acquired, GW Pharma got acquired. And you're going to see the Canadian publicly listed firms both trying to expand internationally, because they can export from Canada. Remember, we can't do that from the US. And then you're going to see them making big investments into new markets. So, we talked about before we started rolling about the Texas kind of undeveloped medical market. That's going to change, right? Some of the underdeveloped markets are going to get big cash infusion That's going to really drive those new markets as well. And I would guess you're going to see a lot of the larger publicly traded Canadian firms very interested in those new markets, because when there's an inefficiency in any market, and especially in a new cannabis market. So if you look back historically at the performance of these different states when they first come online, prices are way high, right? Price per pound is way high because there's a huge demand all of a sudden, right? And there's just not the supply chain because it's an organic product that has to be grown in the state, right? So you've got a 2.5 to 3 month growth cycle, right? And if everybody turns on the lights at the same time, right, you get these big bubbles until it kind of starts to normalize, like Colorado, which is the most developed recreational market in the world, where we don't really see these big dips anymore in price. It kind of became stable, commoditized, if you will. And that's, I guess that would be the kind of the trends that I'd be looking for 2021. And then
how did Colorado pull that off? Like, what are they doing different to avoid those bubbles, like you mentioned?
Oh, I'm not sure that we're doing anything necessarily different. Every regulatory environment's a little different, right? No matter what. Just because it comes down to the county, and there's tiny changes at every level, right? You got federal policy, state policy, county policy, city policy, and so depending on the way that you legalize it, like so for Oregon for example, like they gave out a bunch of licenses. They gave it to whoever could fog a mirror, and so what ended happening was an oversupply, right, and an under demand. And then what happened was, a bunch of those companies, they were selling pounds for less than they could grow them for. And then you saw a snap back, the pendulum swung the other way, right? So it's just a normalization of invisible hand economics, right? You're just supply demand. And so Colorado, I don't think has necessarily done anything better necessarily. We've made some good decisions in the way that we've kind of legalized it in a way that there has not been a huge economic trauma from in the cannabis space in general, and not just macro in all Colorado's finances, but cannabis in general has been fairly stable. And credit the MED for the way that they legalized it and kind of step by step and kind of led the way from a regulatory perspective.
Right.
But it's really just time, right? In the simplest of terms, right? There's just been time for the market to kind of normalize, which you're going to see. You're going to see this in a lot of states, but there's definitely big inefficiencies when markets first start. And if you're a first mover in those new markets, you can definitely make some big margins very quickly, which kind of gives you a head start. It's kind of like sitting down to a poker table and winning the first hand big. It just makes the rest of the thing easy. So
right.
I think that's probably what we're going to see, definitely in those new markets.
No, that's a great explanation, man. I love the way you put that. It's really easy to understand, and it makes sense. And so, my last question is, and the last topic I guess that we should cover is industrial hemp, right? So growing hemp outside of the purpose of cannabinoid extraction. So we haven't even scratched the surface of that, because as you mentioned earlier, on the cannabinoid side, we're still facing the challenges of infrastructure buildouts, right? And making sure that the supply chain is there, and that's non-existent on the industrial hemp side. So what are your thoughts on that side, and what type of potential that would bring in terms of everything, economic impact, environmental, everything?
Sure. Okay. So the first thing I will say is that to evaluate THC and CBD, you have to really understand these are two vastly different products. And so where it gets a little confusing, because they've grown from the same, plant, basically genetically. However, they're way different industries, way different, right? So CBD is a nutraceutical for all intents and purposes. Okay. Which means that it has a way different effect on the consumer itself, much more subtle and really more health focused than anything else. Okay. There's no psychogenic in it. Now, the reason that's important is because there's no barriers to entry in the CBD market. There's no restricted distribution over state lines. There's different consumer base that are using it for a different need. Okay. And there's no regulations at a federal level to regulate this plant.
Right.
Okay. So way different business than being in the THC business. And a lot of people make this mistakes, even at a very high level, that people had assumed that because it came from the same plant that you could really be a company that does both and really has a focus, right? And it's not that you
No.
can't do both; it's just that they're very different businesses.
Right.
I mean, you can look back at interviews I've done 3 years ago, and I was telling people the same thing, and everyone was telling me I was crazy. I was, they were like, and I was like, the CBD market's going to fall apart. The bottom's going to fall out of this market, and it was just because I listened to a lot of pitches, and I mean, everybody and their sister was coming to me with a CBD deal. And there's an old expression in stock brokering, which is when your landscaper gives you a stock tip, sell everything. And maybe that's wrong.
Hey, that's kind of what we're living in now with the Reddit trading and all
You
that.
got it exactly. So, you got it exactly. And maybe that was a little more derogatory than it needed to be, but that's the old saying. And it really just means that when everybody is excited about something and greedy and like thinks that there's an opportunity, that's when you sell, right? That's when you need to be out of that space. And that's really when I started to get nervous about CBD. Was really just because so many people that were not interested in THC became interested in CBD, really because they lacked the courage of their own conviction that THC was going to be more legal, not less legal. So their kind of half measure was stepping into the CBD space. So there's a capital stack, right? So you've got operators that they spend their own money to open a business, right? Then you've got angel investors, like those are the first people in, friends and family. Mm-hmm. Then you've got venture investor, private equity, family office, publicly traded firms, right? That's roughly the capital stack. There's some other ones in there, but for the purposes of this metaphor, that's the capital stack. Okay, so as you move through the capital stack, there's also a stack of what people are comfortable with from a regulatory perceived systemic risk, meaning, so CBD was the first thing that everybody was comfortable getting into because of the perceived risk was lower, okay? And everybody in the capital stack went through the same progression of, okay, well, first I'm okay in CBD. Okay, that went okay. Now I'm okay in medical cannabis only, right? But it's only medical. And then they get comfortable with recreational cannabis, right? Okay? And everybody goes through the same kind of transition where they're like, okay, well, I didn't get my finger bit off. Okay, well, I still didn't get my finger bit off. Okay, you're right. So right now we're right at the kind of, so if obviously operators are 100% comfortable. Venture guys are now taking, like, we see these SPACs coming in, they're good in recreational, right? Then we're seeing kind of private equity, right? They're making big investments into publicly traded recreational cannabis in Canada. Okay, and then you've got recreational for the publicly traded firms, which can't do in the United States yet, right? So that's kind of give you kind of a gauge of where we're at moving through the capital stack. So there was a lot of companies, and the reason that I bring that up is because there was a lot of companies that, they wanted to be in THC, but they were too afraid of the systemic risk or their perceived regulatory risk to make an investment into THC. And so the mistake they made was assuming that by being involved in CBD, that would be a natural progression into THC.
Completely different
wrong.
Regulatory framework, completely different. Yeah, everything's different, like you mentioned earlier. Yeah,
it's totally different. Can't even market the product the same, right? You can't even even reuse the infrastructure that you use. You can't use the buildings, the grows. It's totally different business.
Not to mention the place in which you are located. Like the state dictates whether you can sell for medicinal or recreational purposes on the THC side, right? So you have to be positioned in the right state. Yeah. Okay.
You got it exactly. And so I saw a lot of that. I saw a lot of that early on, over the last 3 years, where there was this oversupply of CBD because there's so many people growing it. And I know of warehouses that are like, there's rotting CBD biomass because nobody can extract it, because really nobody has any use of this outside of maybe some CBD cigarettes, outside.
So this is where I have a question, because that makes sense on the financial side, right? Sure. Of like why you would want to get into the space to avoid risk, right? Mm-hmm. Because THC is completely regulated differently than the hemp side, right? Sure. But like part of me also thinks, well, we do know that there are like over 150 minor cannabinoids in the plant, and we're starting to learn more about the efficacy of each one. Sure. So absolutely. It's like, I agree with what you're saying when like I don't smoke CBD flower or CBG flower. I don't understand.
Very few people do.
Right. And I don't understand why you would consume it that way. Maybe there is something to it, but when I think of CBD products, I think more of like consuming, whether it's a tincture, putting it in my coffee, inflammation, pain relief type stuff, putting balms on my shoulders. But if I want to consume cannabis and get that psychoactive effect, I'm smoking THC, right? So I guess what I'm saying is that I would understand why they would go that route and avoid risk, but I do see that they probably see value in these other minor cannabinoids. But you're right in that it's a huge hard jump to kind of play in both fields, right?
It is, and again, I do not want to discount the to borrow your term, the efficacy of those other cannabinoids, because they absolutely do have value, and we really only understand about 11 of them right now. And in experimenting and or exploring them with the industrial hemp space is definitely a cheaper and less regulatory fraught way to go, because obviously they share a lot of the same cannabinoids, THC being the only one that's well, not the only one,
right?
But the main one that's psychoactive that we have selectively bred for thousands of years, which is what's made that concentration weight to volume so much higher, is by on purpose, whether we realized we were doing it or not. And now we definitely realize that we're doing it.
Right.
But there is definitely an opportunity in that space to explore the other cannabinoids, and I would submit to you that it's really going to be the big pharma that is going to have the most interest in that, because the nature of the plant, unless you can do something like Epiledex that GW Pharma did, which was they're able to get an FDA approved treatment, which means that you can't just be like, oh, this is safe. It needs to be this does this, with a double-blind placebo-controlled testing that you're able to show that it's helping people with this very specific thing. So I would argue that it's not going to be the industrial hemp side that's going to develop those cannabinoids. It's going to be big pharma, and not big pharma, pharmaceutical strategy, if you will. Right. It won't be a a nutraceutical. If they're really going to they need to be able to have a doctor write a script for it to really have the upside, because otherwise, you can still get those same effects. You're just getting them with a bunch of other cannabinoids. So on the industrial hemp side, I think what you are going to see is think of the word industrial literally, is that hemp is an excellent fiber for making things in general.
And that's what I was talking about, is for the material goods side. Yeah.
You know what? So, I was on a panel, and I'm trying to remember who said that, but she was great. She was so smart. I think she was a lead allocator for another VC firm, and she kind of smiled because a similar question came up, and she goes, "Just because you can make it out of hemp doesn't mean you should," which is very, it's very simple, but like in a pie in the sky idea, we're like, oh, it's great. We can make this stuff and make hemp plastic and make right. Which there are things that we can make out of hemp, and we can make it out of hemp better. There are also things that, no, we can't. Like there's a reason that these scientists and molecular biologists have come up with these different materials, because they do work better, and not necessarily that they're more ethical, or that they're more, cheaper or anything. Right. But at the end of the day, companies that have a bottom line to make, that are not, emotionally invested into the efficacy of growing and consuming the hemp plant, because we know it's better for the environment. Like there's a whole litany of kind of ecological and sociological reasons to do it. But at the end of the day, they have a profit to make. They're going to focus on doing whatever is the most cost effective and effective for their product, which is not always hemp. But that is not to say that having another, ability to produce a commoditized fiber that is good at, very good at a few things, is definitely going to affect the manufacturing across the U.S., across the world actually, and China is growing a lot of hemp.
They're growing a lot of hemp, and they're buying a lot of hemp, aren't they? Like they're having a lot of hemp imported into the country. They are.
Well, read. And part of that too is just because the Chinese population is so big, and there's just a lot of smart business people. I mean, the Nikkei has been doing really well. Them as an economy is doing very well. So not unlike the United States, there's a bunch of entrepreneurs. There's people that can see an opportunity and are trying to take advantage of that opportunity. And so, at the end of the day, you got to remember that even if we can look at this from a macroeconomic perspective and go, okay, well, here's kind of what this group of people is doing, and what's kind of going on in the public markets. These companies are run by human beings, by, with their own ideas. I've given you a bunch of the kind of the way that I see the market. That doesn't mean I'm right, right? It just means like that's the way I see it. Sure. And different people can have different strategies or different ideas on how they believe that this is going to shake out. And believe me when I tell you, I've heard a lot of them. And so, this is kind of the line between humility and conviction, right? You got to have enough conviction that you're willing to have courage to take a risk, because courage is not the absence of fear, right? It requires fear, right? It's being afraid of doing it anyway. Um, and having a little bit of humility on the way that, well, I've made some assumptions that were totally wrong, right? And being able to go, okay, well, that was wrong. We need to change strategy or adjust. And so that's a fine line to walk, I think, for any entrepreneur, because it is an irrational thing. It's a tough thing. And just like you're running your own podcast, and after you left your corporate job, that takes courage. It takes a belief in yourself and a conviction to get up every day and work for yourself and grind like that. So, I applaud you, and I obviously wish you the best on all your future endeavors, and obviously always here to help if you have anything else that you want to chat about. I'm always here.
Yeah, no, Rick, I appreciate the kind words, man, and for your time today. You're super knowledgeable and very transparent in your thinking, and you're saying it's not the end all be all what I'm saying, but based on my experiences and what I've seen in the space for a number of years, this is kind of what your perspective is, and I definitely appreciate it, and I know that the audience today really got a lot out of it, man. So before we wrap up, Rick, I want to give you the floor and just leave the audience with any of your last thoughts, before we wrap.
Oh, last thoughts. I can't tell you how grateful I am to be in the cannabis space and to be part of what I believe to be the biggest economic opportunity of what will be my lifetime. There's definitely some other big industries, solar, um, you know, satellite defense. There's a lot of interesting industries, but um, cannabis convalesce in a way that is so beautiful, in the way that uh, there it inspires entrepreneurs. It gives a lot of people an opportunity to create wealth and create something for themselves. And at the same time, there's no real penance for bringing this product into the socioeconomic fold, because it's not killing people, it's helping people, on almost every spectrum of the product, whether that's, on the CBD cannabinoid side, where we're like helping childhood epileptic seizures, to, like, I had a really stressful day and I really would like to just relax and kind of turn my brain off and, watch 1992 cartoons. That's a mental health thing. So, and the gamut between those two things, it really, maybe this is, I'm the big bad venture capital guy. So, for me to talk kind of like this is maybe silly, but I feel good that the product that I work so hard to bring into the world um, is not like alcohol or an opiate or something that is causing damage to people's livelihoods, or emotional health or their physical health. And that my goal really is just get the world as high as possible. And I think that that's a wonderful thing. So I'm very grateful to be in this space and the opportunities that um, I've had. And I in I will sooner die than fail, I can tell you that much.
Hey, well, that's an awesome goal to have, and I want to join you in that effort. So we'll be pushing that message together, man.
Well, you know what? Hey, you're a fantastic interview. I appreciate being on the show. And again, like I said, if you ever have any questions or anything that you want to bounce off me, I'm always here to help.
Absolutely. I definitely want to have you on again, Rick. You're very knowledgeable, informed, and as the industry progresses, we'd love to hear your insights more and more. Before we wrap up, tell people where they can find you on your website, social media, things like that.
Sure. So clientelcapital.com is kind of our catch-all for if you've got a good idea in cannabis, or you're looking to invest into a professionally managed venture fund. We can chat. And that's I'm sure it'll be in the comments how to spell it correctly, but I always thought the spelling was silly. And you can follow me at the Cannabis VC on Instagram, and obviously that's my personal Instagram. But I am a big believer that vulnerability builds trust, and trust builds relationships, and relationships build empires. So you can see what my life is like day to day as a VC in the space, and kind of, I'm very lucky that the type of investors that we have are all really empathetic, compassionate, ambitious human beings. And at the end of the day, we're building these companies together. So very grateful for the investor base and how I get to spend my time. So if you want a little insight into what the day-to-day is like, you can look on Instagram at the Cannabis VC. And obviously happy to talk to people on LinkedIn if they have good ideas, or they've got a product that they think can change the world inside and outside of cannabis. We do deals outside of cannabis as well. So we're always looking for innovation, passionate people that let's call it no pessimistic people. Want those optimists.
That's right. Well, you heard it from the transparent man himself, Rick Batenburg III. Thank you so much again, man. We'll run it back again real soon, okay?
Hey, absolutely. Hey, thank you so much for having me on.
Yes, and thank you all for listening. Bye.